themselves. I'd like to confirm if all the teams are in. So if I call out your team, you just confirm you're here and just give us the speaker names from your team. Just quick introduction and we start. Do we have the team from Opening Government?
Yes, man.
Both speakers?
Yeah, my partner is here, don't worry.
Cool. Do we have the team from Opening Opposition?
Who's here?
Do we have Closing Government?
Is here.
Great. And do we have Closing Opposition?
CO is here.
Amazing. So I'd like the panelists to introduce themselves just to confirm if your network is clear and you're able to hear the speakers, as well as the fact that we can hear you. I'm not sure who's speaking, but yep. Okay, go ahead.
Hi everyone, I'm Abhayvir. I'll be your panelist for this round. All the best for the round.
Hello everyone, my name is Khar. I shall be the panelist for the round as well. All the best for the round and congratulations to all teams who have made it this far.
Amazing. Thank you.
Amrit Singh Saluja, and I'd also be one of the panelists for this round. I congratulate all the teams for reaching here. Good luck with the debate, and I'd prefer if you refer the panel as a whole. Thank you.
All right, good day everyone. My name is Akinjare David, and I'll be a panelist for the round. Congratulations to all the teams for making it here, and I wish you all the best. Thank you very much.
All right, great. So before you begin your speech, just confirm that your preferred pronouns that will avoid such issues when you don't have equity violation instead of proper deliberations. 7:15 speeches. I'm not sure if speakers can time themselves, or let me just check if the timer works. I'm not sure how to operate it. But preferably, I'd like appreciate it if speakers would time themselves. Right. Does anyone know how it works? The time bot. Just so we can keep it working. All right. Amazing. So if you could be running it for me, Rain, I'm not sure, but yeah, thank you. If you could run it for me, I'd appreciate. Great. I think there's nothing else. I'd like to call the House to order and invite the Prime Minister to deliver their speech. Yeah.
Yeah, hello.
Yes, you're perfectly audible.
Oh, great. Thank you. And I happy to have made it this far. Okay. So for POIs, text space as usual. My eyes are on the text space. I would prioritize taking closing opposition early minutes into my speech. So if you need a clarity or anything of that sort, please feel free to drop it on the text space. I would take you the minute I see that. I would please, nobody should unmute for any reason, just to prevent risk. All right. Super Nana, I can see that.
Are you having any issues?
No, I'm not. I'm just trying. I'm starting now. Don't worry. Great. I am coming. Oh, shit. Perfect. So I am going to start my speech. 2, 1. a few things that are very important, which I'm going to do to frame this debate properly. I'm going to define what exactly this debate is about. Considering that this is a policy debate, I'm going to tell you what our policy looks like, what we intend to do, and what we intend to achieve. But before I do that, I would just like to clarify what exactly the counterfactual of this debate needs to be. Note, the debate says, should we mandate institutional investors to invest more than 5% of their portfolio in one industry? Opposition teams cannot come to argue that instead of 5%, let us give them 10%, let us give them 15%. What they have to defend on their word is no restrictions at all, where we don't in any way mandate these people to invest a certain amount. So UP is coming to defend a free market system of a sort where everybody in institutional investors are not giving any cut on what exactly they need to invest. I think this makes for a very reasonable debate. So we don't have a messy quarterfinals when we begin to make the debate a debate about figures and which exactly what these people. Secondly, what exactly are these portfolios? Just for definitional sake, we think portfolios in the instance refers to the collection of financial assets that these individuals own, these institutions rather own in themselves. They could include a variety of financial instruments such as stocks, bonds, mutual funds, real estate, other investment vehicles, etc. I think the purpose of creating these portfolios is to achieve diversification, spreading investment across different asset classes to manage risk exactly. First piece of engagement from opening government, the legitimacy of state. Because state is going to be the one making this decision, mandating these institutional investors to not invest more than 5%. We think it's important that we interrogate why state has the legitimacy to act in this very instance. There are two things I'm going to say here. One, we think in the vast majority of instances, institutional investors of this sort who manage multiple large funds and identify as venture capitalists are powerful to the point where they have good relationship with states. In the instance where they are the ones that receive tax cuts, tax breaks. Why? Because in instances where states run into bankruptcy, right, where recession hits the states, these institutional investors in themselves are mostly the ones that help bail out states, right? They are mostly the ones that states usually look out for because they identify as too big to fail companies in the vast majority of instances. We think because of this relationship, state has an obligation to regulate them in an instance where their sustainability is assured to prevent them from running any form of risk at any point in time. The second analysis that proves this claim is the financial crisis of 2008. Note, what happened with the Lehman Brothers and why the financial crisis hit the way it did was because of how powerful Lehman Brothers institutions were at that particular point. They were not so regulated and they were giving out money in different ways to different people. When they realized that they had run into bankruptcy, we saw how big it hit the state. We think to prevent those type of scenarios like the financial crisis of the US in 2008, it is particularly important that states have a way in which they regulate these guys. We say the way in which you regulate is to force them to not invest more than 5% of their portfolio in any one of these industries that exist within this debate. First piece of argument. We think we need to reduce the monopoly of wealth and financial liquidity of these institutional investors. There's a reason why this argument is so different from every other monopoly argument we've heard. There are two concerns here. One, we think these investment institutions or these institutional investors have the investment capacity that creates monopoly through limiting access to market entry, stifling competition, and all those type of things, right? Because they have the capacity, they are mostly so rich in themselves. The second thing to say here is that the most common strategies of this investment firm is post-risk in nature. That is, they often invest in buyouts and managers and acquisitions, meaning owners of startups in themselves would have taken all the preliminary risk at the preliminary stage. And then these institutions come in when there is an assurance of scaling. There are two problems we identify here. One, a lot of businesses starting up in themselves could have succeeded if they had come in at the beginning using their money and succeed. But secondly, the ones that are able to scale
take longer amount of time and are unfairly bought by these institutions where they go to invest more than 5%, 50% of their portfolios in the vast majority of instances, right? What does our policy then do? Two things. One, our policy forces these institutions in themselves to want to diversify more investment on startups in themselves so that they can still maintain the level of portfolio expansion that they have had prior to this policy. The second thing our world does is that it means that we have more niches that are likely to be explored, and underfunded companies or startups in themselves can also get more investment of up to 5%. That is, in status quo, they focus investment on insured industries like estate and pharmaceutical. That is what we see in status quo, right? Industries that have the potential to massively boom. That these institutions go and invest like 50%, 20% of their portfolio. We think we change that norm. If they have to now cut up the level of investment in those areas to 5%, it means that they are now able to divert them to a large number of companies across multiple industries. What this means is that we are more likely going to help start up companies in themselves.
Did the speaker disconnect? Confirm if I'm audible to everyone.
You are audible. The speaker is not. I think they have disconnected.
All right. Could the partner just quickly confirm if what's going on, and then we get back on track?
Okay, just hold on for a minute. Let me get him.
That's fine. Have you received any communication? Okay, so we just wait 3 or so minutes, and if like there's nothing, we'll have to come up with another resolution. Okay. So if there's nothing, if his speech was only starting, we were going to ask you to iron, but since there was only 1 minute left, you just have to integrate the rest of the matter that you'd have argued into your DPM speech. And I hope that's all right. So for the purpose of progress, I'll move on with the debate and invite the leader of opposition.
No, because
Yes.
why don't you let him finish that like 1 minute speech?
Is that okay? Let me
The
just
remaining
confirm.
minute of this, because it's gonna seem like prejudice of some sort that they had 18 minutes instead of 14, something like that. Just let him conclude the speech, then we proceed.
Nana, do you think you can do that?
Uh, yeah, sure. Just hold up. Is it 3 minutes up? Where did you lose him? And just give
The
him a
last thing, the last thing I was talking about was diversification of investments, like reduce the amount they invest and incentivize them to invest in multiple small startups. Yeah, that's the last thing I was saying.
Yeah, sure, that's fine.
All right, cool.
Okay, I asked the POI so far, but it'll be great if you guys asked one. Cool. Cool. So I'm gonna continue from there in 3, 2, 1. So the idea behind diversification of the economy is true. Because when we mention to so for example, if you leave investors alone, they would
Sorry,
always
Nana, sorry. You're breaking as well.
example, they would always invest in industry or the cars industry in particular that may put into
Nana, you're breaking as well.
argue that
Hello?
key to their hearts are not going to grow.
Hi, Mascot. Are you able to hear us?
Yes, I can hear you. Can you hear me?
Yep. So, is your network or whatever was going on fixed now?
Yeah, it is. It is.
Right. So I'm thinking you can resume because Nana tried to, but then we couldn't hear anything. You had a minute and 20 seconds left.
Okay, I apologize for the cut, the break. I really don't know what just happened with my network. So where did you miss me?
You were talking about how if you reduce the amount that they can invest, you incentivize them to invest in multiple small startups.
Okay. Okay.
Yep. So whenever you're ready.
Yeah, thank you. So just before my timer starts, or yeah, you can. I'm resuming my speech, but in case up has a POI, because I know I was looking at the text space and I didn't see. In case any came up, I think I would like to start my speech with that. So I'm resuming my speech. 3, 2, 1. So largely, right? Largely, what I was saying before I probably cut off was why we think I had already proved why at the end of the day, the only way that we can regulate investments work to prevent institutional investors from crippling the economy of these states is by regulating them in this particular way. And that is more likely how you can regulate it at the end of the day. But more importantly, let's talk about what happens on our world, right? We think that you prevent risky decisions from most of these firms because in status quo, like I said, most of these managers and these venture capitalists are more than willing to invest in hot startups when they see them rising. Without the policy we put, they are more likely going to invest more than 5%, 50% of their portfolio, hoping for a quicker return of investment. The problem is the more these risky investments fail, the more bailout state has to do. But secondly, for some of these venture firms in themselves, diverting other state resources come into play and it's more likely going to harm them. What's the best up case you probably get? They would come to talk about things like choice industries, like certain industries will be deprived of funds in themselves. We think at the end of the day, there are a lot of ways they can get that money. This is a very simple debate. Up must prove why states should not in any way regulate how institutional investors invest their portfolio in the industry of those states, especially given the amount of capacity that they have in that particular instance. My partner would do a lot on engagement. Proud to propose.
Great. Then I'd like to thank the speaker for that fine speech, and I'd like to invite the leader of opposition. Yeah.
Okay, so I just want to confirm, am I audible?
Yes, you are.
Okay, no preferred gender pronouns. I won't be taking POIs in the chat. Just interject me and ask because I'm not checking the chat. And yeah, big shout out to anybody that wants a shout out. Okay, so I'll be starting my speech in 3, 2, 1. Chair, for any team in this round to be in contention to win, there are two major things that you need to prove and two major burdens that you can't run away from, including what opening government is trying to do. Number one, which side of the house can ensure to you that they pool more money for startups, but also strategic industries in the country? But secondly, which side of the house ensures best the development of these particular industries, which we think is a major burden as it pertains to this motion, because the motion is about money and it's about industries. What we hear from opening government, which is a very big and general assertion, is that there's many ways people can get money, but they don't mechanize it. And that's a large problem with a lot of the things in the case that I'm going to deal with. A lot of assertions as to how things can be done, as to why things ought not be done a certain way, but no mechanization as to what that looks like. We think that if it was really possible to get more money without these particular venture capital firms, then we wouldn't have been doing business with them in the first place. We think it's a strategic decision that we make and something that's particularly important for any country in this particular economy. But quickly, let's deal with some of their positive matter, because it's a lot of arguments, it's very uncomparative. So the first thing they talk to us about is that because of the relationship between state and financial institutions, and because of financial institutions most time bailing out states within financial crisis, it's a bad thing because there's no accountability systems. Chair, number one, they don't prove to us how comparatively on their side of the house, even when companies invest at 5%, that accountability actually exists, because there's still an investment taking place. So the argument is uncomparative in and of itself, because they don't prove comparatively how in their world that's not happening, even though companies invest 5%. So just because of that, we can't take it. But secondly, we think that at a point at where major productive industries in a country are being invested in and large amounts are being invested in, the government has an obligation to make sure there's accountability system because of public scrutiny from people in the country in and of itself. Those are things we think are particularly important and things that you cannot run away from in this particular debate. Note that, panel, with that uncomparative argument, we don't understand where they're coming from with that argument, and it doesn't make any sense. Then the second thing they talk to us about is how it forces institutions to diversify their portfolios. This is actually a very funny argument, because if you're talking about billion-dollar venture capital firms and investment companies, number one, they don't show us any reason or any incentive for these particular companies to diversify their portfolios. And secondly, if they have as much money as we're both agreeing that they have, they can just simply withdraw from your country and invest somewhere else where they're allowed to invest more than freaking 5%. They don't give us any mechanization as to why exactly these companies have an incentive to stay when they can't invest the amount that they want to invest, considering that they have so much power and so much grab and so much influence. And secondly, we just don't understand why I just won't leave and invest somewhere else where I can put my money the amount that I want to put my money in. Those arguments for those particular reasons don't make any sense. Then the third and final thing they talk to us about is this argument about how small companies now get investment. Two strategic reasons why that's not true. We think, number one, they don't get a sufficient amount of investment that they get in our side of the house, because on our side of the house, we actually pump enough money into these small venture companies for them to function. But on their side of the house, they strive, they don't allow these companies to get that amount of investment. And that's particularly a bad thing because of the amount of money that these particular companies need. But secondly, don't try and play on our emotions in this debate and say, you don't get small venture companies or small industries any type of money because these people won't invest in them. This is not a charity. It's a capitalist financial system. If your idea is good enough or the industry is productive enough, people are going to invest. And we want people to invest the amount of money they want to invest, number one, but the amount of money that's productive enough and can cause production to propel forward in that particular regard. That is what we think is particularly important in this debate panel. Comparatively, before I even get into my analytical extension or my argumentation in this debate, you need to analyze two things. And there's two things I told you about in the beginning of the debate that I've already comparatively showed you why opening government is definitively out of this debate. Number one, OG can't prove to us on any level how they get more money for these companies. The only thing they say is diversification, but we prove to you there's no incentive to diversify, number one. And secondly, countries can just withdraw. And secondly, who best propels these particular industries forward, panel? We think that on our side of the house, we allow investment and money to be pumped into these particular countries, and that's how we propel these particular industries forward. Comparatively already on the clash of money and on the clash of how you propel these industries particularly forward, we think that we win those things. But panel, what's one thing that's very important in this debate and that no side can run away from? The debate is about institutions and it's about money. Startups and institutions need money. And no matter who you are, like I said, we will take your money and we will invest it till the point where we are satisfied with what we have done and to the point where our industry is propelled. You need to prove to us how you get us money, because we need these money to invest in our particular things. What can we tell you? What's the benefit of these money and a benefit of more than 5% of this money that in here? Number one, we don't limit the capital on our side of the house these companies can pull. But secondly, you put less of a financial strain on governments, particularly in third world countries. They need to subsidize these particular companies companies all the time because they don't have enough money or enough investment. And already we see that governments are not invested in like pumping money into SMEs. So that's particularly a bad thing. With these particular investment firms and these companies, we think that it just helps in general. But secondly, we think that these venture capital firms and these investment firms contribute a large amount to the growth and development of this because of the money, but because of the experience and expertise. That's why in Nigeria, for example, we needed things like Shell for the petroleum industries. In South Africa, we needed things like Anglo Gold to help with the mining industries. Those are things that we think are particularly important in this debate. But what's the second line of argumentation, and what does a big amount of investment do for us in this debate? And something that I'm going to talk to you about now. It means that on our side of the house, and this is an argument that you hear exclusively from opening opposition, you can now instill systems of accountability and a watchdog system. What does this look like? It looks like when venture capital firms invest a large amount of money into particular industries, there's a lot of public scrutiny, number one, but it means that government has to hold certain actors accountable on our side of the house exclusively because of the large amount of money and because individuals know that it's a particular targeted key industry. This looks like in countries like Namibia, when they invested in green hydrogen. Now people are actually looking at the industry because they see a substantive amount of money pumped in there, and people know that it's prone to corruption and stuff. This means that it works in two ways. Number one, venture capital firms hold governments accountable, and vice versa. Governments also have to hold venture capital firms accountable. On their side of the house, comparatively, they don't get that benefit because the amount isn't even substantial enough for that to happen. But also, if it was true, they don't even prove how there's accountability on their side of the house. What is the major effect that we get in this debate, and the effect that only us from OO can claim? We think that one, you limit the amount of corruption that's more that will be prevalent in these particular countries, because now there's an accountability system and a system of watchdog actually taking place within these countries. We think it's particularly important because for far too long, these industries have been deprived of this, number one. But secondly, people are looting from these industries systematically. We believe two things in this debate panel. When it comes to strategic industries in these particular countries and industries that propel growth of the economy forward, we serve that best. When it comes to industries like young startups and people needing money and investment in their company, we serve that best. We need money. People need money. Companies need money. On our side of the house, here's things that we can exclusively prove to you and things that we deal away with from the other side. We can ensure accountability when money is pumped in. We ensure public scrutiny, so it means nobody does any funny business in our company. And we ensure money for companies. Accountability, money, and everybody lives a happily ever after life. Chair, because we prioritize small venture capital companies, because we prioritize propelling the industry forward, and because we think, it's not a reason for us to lose this debate, we win.
We'd like to thank the speaker for that fine speech, and we invite the Deputy Prime Minister. Yeah.
Hey guys, am I audible?
Yes, you are. I did with you breaking, so maybe if you could yeah.
Right.
Okay.
Okay, let me just give the command for the timer myself. I would like to. Okay, it's done for me. That's great. I'm going to start pretty soon. POI is in the chat. So starting in 3, 2, 1. Look, I'm going to take my time a lot because the debate is a financial argument. Up cannot just get away by, repeating consistently that, these guys give you zero mechanization. They just weren't listening attentively enough, right? Because my partner told you 3 things, and it totally engages everything that Elo just told you. The first thing is that Elo says there is no comparative argument about accountability from opening government, so they don't know how we get accountability. I'm just gonna reiterate for freak's sake, right? The first thing is that if it's a mandate now and it's a freaking law, are you listening, right? everybody that invests into any industry at the end of each year needs to make sure they disclose the amount of money they've invested to regulators. It could be the central bank of the country for all I care, right? I don't know, right? But you're going to have to disclose that you haven't invested more than 5% of your portfolio. This is something that you only exclusively get on our side, because on their side, you can invest as much as you want. At the end of the day, nobody is going to raise an eyebrow about the limits of the money that you invested. That means there is more accountability on our side. The second way you get more accountability is that you decrease the rate at which one particular venture capitalist can control an entire industry. Do you know why? Because the more money you put into an industry, if you invest about 70% of your venture capital, you have so much money invested in that particular automobile industry, and you literally become the person that is controlling it. If there are only like two big brands of transportation in your developing country, for example, maybe you just have Ford and you have Tesla, right? And you have somebody putting 70% of money to invest into Ford. That particular venture capitalist literally owns about 70% of your transportation industry at that point. It means that the government can hold these guys accountable, because they can threaten you with pulling out, and they can threaten you're going to crash your economy. Literally, if these, like, and OO tells you that, they say, oh no, we're going to pull out your money and we're going to go away. If you don't limit it to 5%, they can hold the government to ransom in more instances when they want to get away with their corporate and capitalistic whims. We are the team that gives you on two metrics deeper levels of accountability. The third thing that OO then tells you is that, oh look, these guys are going to go away because we're going to pass this law. Three reasons why this is not true. The first one is that these guys are always going to want to come down to invest. Do you know why? Because financial markets in other developed countries and other countries all across the world are saturated. They know they need to be in the third world countries. They know they need to be in Africa. Even if it's in USA, they know they need to go into other starting up industries, because those ones are not saturated. The more money you put in saturated industries, the higher your chances of losing out, because there's already somebody that is leading that industry, and they will take away all of your money. The other thing that these guys then say is that, look, they win. They have a win-win situation. Why? Because the state doesn't have enough money to put into startups. So you need these venture capitalists to be there. You cannot afford to piss them off. Here's why that's not true. Because if you leave these guys to put all of their money into already established industries, what you have is that your economy becomes unbalanced. You're going to have one leading industry. If it's exportation of raw materials, if it's exportation of gold or mining of oil, that is going to be your only leading industry. The problem then becomes that when the prices of these resources that they invested so much in, like your oil, like your gold, if they fluctuate, your economy becomes volatile, because other things like tech and other things like agriculture in your economy were not invested much into. It's only with this law that you legally force them to put money into other areas. What that means is that other industries in your economy as a country gets to survive if one of them collapses or if one of them crashes. I'll take that PR. Shoot.
Please explain to us why a venture capital firm with multi-billion-dollar portfolios won't just withdraw and go somewhere else and put their money somewhere else. It doesn't make sense.
No, I literally told you, where the hell are they going to go, right? Because the transportation industry in the USA is freaking saturated. Uber literally has them in a chokehold. Why do you think Bolt and Yango cannot thrive in the USA, but they need to be in places like Ghana and they need to be in places like South Africa? Because it's so choked over there. So if you give them that law, they will stay. And so first 5%, it would even still get them some amount of returns. They will stay, and over time they would get the more amount of returns, right? But those that would leave, we say good riddance, right? It means they never cared about the economy. They only wanted quick returns, and that is what we've proven to you to not be sustainable on our part of the world anyway. So like, if they want to leave, then hell yeah, like let them go. Those that understand to want to like build a sustainable economy with you are going to stay. What is the weighing on our arguments on why they're winning? Panel, look, in financial markets, yeah, oftentimes there are stock bubbles that are created because a lot of people just put in so much money in over there. At the end of the day, that money, even though they are venture capitalists, is managed by human beings. Those venture capitalists has a financial manager that is a person, and they have biases that lead them to direct where the funds should go to. Without any legal mandate, what you would see over time, and it's what we've always been seeing, is that the bigger industries continue to get the bigger amount of investment, and their stock prices are so freaking inflated on the stock market. What happens when it crashes, because nobody can tell when the stock market is going to crash, when it crashes, is that more minorities are created for the government to take care of, and they become dependent on the government. This literally happened in 2008 when the stock markets crashed and people became homeless because, a lot of funds were put into the real estate industry because the stock prices were overinflated. What we do is that we prevent overinflation of stock prices, because you cannot put more than 5% into that industry, right? You need to, after 5%, the other 5% needs to go elsewhere. That means all stock prices get to grow equitably. That signals to people then that their money is being put across board into all industries. If anybody's going to talk about minorities in the closing half, you need to know we've killed that argument tightly, whether we're from opening government, because literally the funds that these guys are running with, right, it's also contributed across board by pensioners, people that put their money into these mutual trusts and trusted them to manage it reasonably enough. That means if they crash and if they fail, your average citizen that contributed that money is also going to suffer, and they're going to need the state to bail them out. This law is very critical. Up has no case. The only thing they say is that these guys are so sensible, they are so wise, they'll never make any mistake. If you piss them off, they will leave. I've proven to you that most of them are not going to leave anyways. They don't have any alternative. They are going to stay. But secondly, if they make a mistake, right, our side gives that buffer, because now by legal requirements, they have to invest into other places also. We literally take these guys out. But let me give you the weighing in my last minute, whatever closing half is going to bring to you. Do you know why we win? Because we think that this law makes economies very sustainable. How? I've talked to you about how it prevents stock prices from being inflated. But just in case you don't buy that, we think in every country that you go into, there are several kinds of industries. There are the ones that are really, really fast, and they would give you returns very, very quickly, but they are very risky. So, for example, it could be the it could be the tech industry, right? And that industry, if you put money into it, you would get that returns very quickly, because there was a tech bubble during COVID and what's not. And there is other industries that are very slow. For example, agriculture. You have to put money into it for 10 years, for 15 years, and whatnot. If you don't have such a law in place, every investor, a lot of the venture capitalists, because they want quick returns, would put a high percentage of their money into things like tech over time, hoping to get a quick return. What happens though is that the tech bubble can bust, because we saw it happen after COVID. When COVID passed and people were starting to go back to work normally, all those people that launched fancy apps to get people to work remotely and whatnot all crashed. They had to lay off workers. When that tech bubble burst, people are going to get laid off. That industry is going to suffer shocks. We don't want 70% of your venture capitalists going down the drain because you couldn't check them. We're the only team that shows you that this law is necessary. Vote opening government.
Would like to thank the speaker for that fine speech, and we invite the deputy leader of opposition.
Am I audible?
Yep, you are.
Okay, with that, please write POIs in the chat box. Please don't interject me. I have no specific preference to gender pronouns. And with that, I will be starting in 3, 2, 1. Panel, the only thing that the op bench does successfully is stagnize the growth and development of pretty much every company within the industry section. They do absolutely nothing to show how through such underfunding of companies, you actually expect the industry sector as a whole to still thrive. They incentivize the investors in these countries who already can only give 5% to leave. They have failed to explain any form of mechanization within the policy, and they failed to show how legitimate their policy would, even in the best case scenario, be. So already on this ground, they lose this debate. But continuing on a few rebuttals to the very, very dumb ideas that the opposition bench have brought us. They kept going on about how we don't provide accountability, but they have failed to listen to anything my leader of opposition has said. He said, we have proved to you how that these companies are always parastatal. It is always a bond between government and private investors. Each one, when you start investing a lot of money into these companies, you start holding each other accountable. The government holds the investors accountable, and the investors hold the government accountable. But when you have such a small amount of money from very few amount of investors, it becomes such a irrelevant thing to many investors, and an irrelevant thing also to the government, because there's not much money being pumped into these industries, and as a result, you can literally do whatever the hell you want in these companies. They always say that we only invest in one industry, and you create these bubbles, but however, they don't understand something very funny, that venture capitalists are not dumb. They'll invest in whatever they feel they know is going to be successful, and they know is not saturated. But when you start limiting them to invest in these things that they know that uh, when you force them to invest small amounts into small companies, what would they do? Of course they'll pull out. Their deputy prime minister says, no, they won't pull out, because everywhere else in the world is saturated. The other companies are saturated in the whole world, except these countries that you want to implement these policies in the whole world. Do you think every company is actually saturated? They've taken enough money. Panel of economies everywhere, not economies, companies everywhere in the world beg these venture capitalists to invest as much money as they can in. Of course, they're going to pull out. Of course, when they see that they're not being encouraged or incentivized to invest money, when they're shown that whatever they invest in will probably even not work, of course they'll leave. And then the deputy prime ministers makes the hole even deeper when they say, oh, we don't care about venture capitalists. If they want to leave, they can just leave, which is very, very dumb, because both sides just talk about how important these venture capitalists are. Both sides have proved how they literally carry economies because of how parastated these companies are, how all these companies depend on, yes, half the government funding, which already we see in many African countries. Governments are very underfunded and they cannot do anything, so they kind of depend on the venture capitalists to kind of carry these economies, carry these companies, and as a result, already on this basis, OO are completely knocked out of this debate. But now I will go into a bit of more positive matter, kind of reinforce our ideas and give comparative analysis and summaries at the end to why it is obvious side with government bench. Panel, we need not limit investment from these companies, because through this we can benefit the industry sector as a whole. Why? Because of two reasons. Then when we see that that you can invest unlimited amounts into these industries, you can start investing. If you see good ideas in different places, you can start to help kickstarting small starting companies, and through this we can start increasing competition as a whole, and through this we benefit the economic sector as on a holistic level, and through this we can even benefit the man on the ground, the average citizen. This is our main kind of stakeholder. We need to look at these countries on a very holistic level, on a very holistic perspective, so we can benefit each and every single person, every single citizen in these countries. Panel, the second, and this very, very, very important idea that we have failed to get any analysis or any logic from the opposition side is the idea of accountability. The thing we need to understand is that most industries that we are talking about, or pretty much all the industries that we are talking about, are parastatal. There is need of investment from both the government side and both private venture capitalists. So as a result, we produce, as my leader of opposition said, some form of public scrutiny, a form of watchdog system, where because they have both invested money in, both sides have invested money in these industries, they both want to make sure that no one's manipulating anything, no one's taking control of anything that they shouldn't be taking control of. They'll make sure that they'll kind of hold each other accountable, so we can ensure, we can sort of guarantee that in the end case, we produce the best case scenario. Now, comparative analysis. Let's talk about what each world is looking like. Panel. The team opposition's world is a world where there's zero investment coming to it. The government is already very underfunded, as both sides have settled on. Governments are already underfunded. They need these venture capitalists. But when they start making these venture capitalists hate them, when they start disincentivizing these venture capitalists to invest in these countries, what are they going to do? Of course they're going to leave. They have a million other better places to be. And as a result, because we have proof to you that a lot of these things depend on these venture capitalists, what is going to happen? They're going to leave, and what is going to happen? The industry sector as a whole suffers. What else do we benefit majorly in this debate is we benefit the private industry sector. We benefit the private sector. Why? Because now we kind of encourage venture capitalists. Even on your own, you can start investing. You can start starting up your own companies. We welcome you in these countries, so you can start more companies, and we can benefit the private sector as a whole. That is our side of the house. What they opt for, first of all, they see themselves that they don't care about these venture capitalists, which already shows how they've lost by a mile in this debate. And secondly, they prove to us themselves how they provide zero accountability. And with that, more than proud to oppose.
I'd like to thank the speaker for that fine speech, and that marks the end of the opening up. Would like to invite the member of government to begin the closing up.
Am I audible?
Yeah, perfectly.
Okay. But Mpofu, pronouns he, him, pure eyes, chat space. I'll keep my eyes on it. I'll probably take closing. Yeah. I'll calm myself down and start. Just quickly set up my timer. Okay. Starting in 3, 2, 1. Recognize the entirety of opening operations case is hinged on the idea that there isn't enough investors to invest in industries, and that investors will be disincentivized from investing in industries by this policy, and hence are bad for startups, and we don't ensure any accountability. Let me use their own meta to flip their own case against them. Firstly, they say VCs are not dumb, so they try to invest in the most lucrative of business. Recognize, if an industry is as lucrative, such as tech industry or investment in AI or investment in electric vehicles, regardless of how much margin we're allowing you to invest, we don't think that that takes away from the lucrativity of that industry. So they are more likely going to invest, right? Secondly, the motion says a particular VC or a particular investment firm can only invest 5%, which is to say there is no restriction on multiple firms investing in the same industry just with limited equity. Recognize why this is important. This is important for two reasons. It proves, one, we don't stifle the growth of tech companies or stifle the growth of these startups as opening operations assume. But secondly, we're able to ensure that there is investment in it. They say, oh my God, investors are going to leave. Okay, fine. If you're so dumb that you're going to leave a lucrative business, we don't need your dumbness anyway. You're probably going to tank our economy. What is our extension from closing government? And ultimately, why do we think that this debate as it stands belongs in the government bench? We need to realize two things. This debate looks at the integration of investment and investor culture, and specifically the kind of investor culture that we're trying to cultivate so that we have healthy economics in how our startups and our industries grow, but secondly, in how investors behave in the economic market. This is very important so that we show you how, even on accountability that they claim they have in terms of, we have it, right? 3 pieces of extension that we will get from closing government. Firstly, let us talk about how our world provides
more investment specifically within these markets. Opening government tells how you get a diversity of investment in terms of how more like people participate. Why do we think this is important? We think that large VCs have controlled specific industries. This is to say, you have like venture capitalists that invest so much money in like tech or in AI, and it stifles out investment from other like investment companies. Why do we think that the diversity of investment from different VCs is something that is important for these industries? Two reasons. Firstly, we think that we for the nature, like the tradition of acquisitions. This is to say, you have so many, like you have so much, you have like we have created so many monopolies that we can't even regulate from government, and we think that the harm of those monopolies is that they harm the citizens that opening opposition like cares about, because these are the very people that ought to be beneficiaries of these tech products. These are the very people that can't access those services. This is why AI as a tool for like revolutionizing the tech industry is not developing, because monopolies like Google have been formed and they aren't allowing for new participants. What diversity in the investor market does is that, one, you don't have a single voice telling you what to do as a as a tech company owner in the boardroom. We think that's very important, specifically because if you look at the power that these investors have in these companies, they influence the product that you are pushing out. They influence how we are pushing out that product, who's manufacturing those products. We think that those are key pieces of control that most startups lose, and they lose their essence, right? This is intrinsically bad because we then take away the good culture that allows good ideas that make the world a better place to be invested in, and rather like more focus on a world that is profit driven and like creates monopolies. This is the unique impact that you get from closing government. The second thing on diversity, why we think that diversity is important, right? We think that because you are no longer investing in specific startups, right? You see different investment companies investing in different industries. Opening government gives you the impact on how that's good for economy. That's fine. What impacts do we give you? We think that that's ultimately good for like ensuring that you minimize the risk that investment companies take on. Not only do we protect the startup companies that we're investing in, we protect the industries themselves. Specifically, when you look at high risk industries like tech industry, we think that these are the very same investors that we need in certain like different types of investments, and we think that that's important. But largely, why do we think that this 5% limit is very important, specifically in how new startups perceive investment? We think that a lot of like the perception on like the business market is that you ought to be invested in and somehow you kumbaya and develop. This is why we see so many Shark Tank companies failing, because it's all about selling an idea to stupid people that buy into it, right? It's the same investors that opening opposition is talking about that will pull up, right? Why do we think that that culture is important? We take away the reliance that companies have on investment. We see like more local like integrations amongst startup between companies and companies working on their own to capacitate themselves to like get themselves into retail, to get themselves into mass producing products. We think that these are very important impacts, specifically because it changes how investment is perceived. This is how even in the long term, we even undo the creation of more monopolies outside the already mechanistic reasons that we give. But lastly, why do we think that the buyout of companies is something that is bad? Specifically because it stifles like competition within these like labor markets and within these investments, right? This is to say, you don't get healthy competition between startups, between it is the tech industry, between like whether it's in electric cars. We think that that's intrinsically bad, specifically because we don't get that symbiosis that creates better products, that creates more fulfilling products that individuals can have. Ultimately, why is closing government then the most important government side? We think that beyond just the mechanistics of the market and the protections that you get from opening government, we think that we give more impact and more like mechanistic analysis specifically on why this policy ought to be supported for the investor market and for these startups. Proud to propose.
we'd like to thank the speaker for that fine speech, and we invite the member of opposition here.
Am I audible?
Yes, you are.
All right. Because got the full this the mayor. All right. I'm gonna start. Oh, sorry. For pure eyes, I will accept them verbally because I'm not looking at the chat space, and then preferably ask me at 4 minutes because 4 minutes is lucrative. And then what else? Pronouns, if you need to address me, he, him, and there's a background noise I'm sure you guys can hear. But then if you can confirm that it's not affecting anything, then I will gladly start my speech.
Yeah, it's fine. You can proceed.
All right, cool. So starting in 3, 2, 1, go. Closing government's case rather is the reason why most startup businesses are likely to fail, because at best what they want to do is to give people cheap products that are accessible to them because they relate to the struggles of poor people in Africa, which is different from like the nature of investment in and of itself, which seeks to maximize profit. We think that the reason why startups fail is because they don't want to maximize profit, they want to maximize on pleasing the public, which we think is something that isn't lucrative within business in itself. Let us show you why diversity from CG's case doesn't work. Firstly, we think that when people who don't want to give like some sort of like lucrative power to investors definitely don't deserve that investment in the first place, because you know that you are desperate for capital and this is something that you inherently need. So we think that you should be able to sacrifice at least an element of that business to at least see that business through. We think that the comparative here is to say either you don't get the capital and your business doesn't thrive, or you get the capital and then risk having a few people being the manufacturers but still your business thriving and you being like probably one of the richest people within your country. And we think that that's something that's important, something that we support. Secondly, we think that also there is a lot of like restrictions that you can give to these companies. Like, for example, you don't give them as much shares in these companies so that they don't make so many radical decisions, etc. etc. But let us show you why local integration doesn't necessarily work. Firstly, because it doesn't allow for the penetration into the market, which I think is something that venture investors are going to probably guarantee you, because they've got access to that market. And when you try to do things locally, you're less likely going to invest in that market. Let's talk about OG for a second. When the government comes to the debate, talks about how, oh, listen, we think that there is an unbalanced, there's not going to be a balanced industry when you allow for these individuals to like tap into specific industries at an opportune time. Firstly, they don't guarantee how, when you say 5% investment, you are going to inherently force these individuals to invest in other sectors of the economy, because they just don't care. Like literally, you can't force people who are doing bold to necessarily invest in something else, probably humanitarian aid, whatever, really, or hospitals and something like that, because they just don't care about that. And also, quite literally speaking, it is not opportune for them to do that. It was probably been better during the times of COVID. So we think that that unbalance in industry is something that is particularly checked. Then they can't talk about state legitimacy. Let us deconstruct state legitimacy. Firstly, we tell you that state doesn't have any legitimacy because they don't have money, so they don't have any form of like legitimacy to try and restrict things as finance, because capital is what they need the most. The reason why these venture capitalists know that they need to be in Africa is because there is a deficiency of money in Africa. So we don't think that state legitimacy in this case necessarily works. But also we don't think that state legitimacy can be derived from the fact that, oh, we're going to need to lean on these guys at the point at which we are financially repressed. One, these guys can absorb the risk, so you don't have any business trying to define the risk that they take on. But secondly, we think that that's just selfish in nature. But thirdly, we think that there are still other risks that you can't necessarily like offset for these guys. So we don't generally think that you have any business whatsoever as state trying to be trying to regulate these guys in some type of way. What all teams in this debate miss is where government necessarily comes into this play. Government doesn't come into the debate as the regulatory factor, but it comes into the debate as the individual who doesn't have money to finance all his industries and therefore needs to at least alleviate part of the burden and focus on some of the industries that are necessarily opportune at that particular time. What does this mean? This necessarily means that when you allow for investors to invest probably, let's say, 70% of their money into like transport industry, it means that government has got less of a burden to focus on the transport industry. And because government is poor, doesn't have money, it's far much better off investing in education and health, because now they can channel money for the transport industry into those particular sectors, right? We think government can do a lot in terms of regulating the power that these individuals have, but we don't think that arguing that there's going to be a monopoly is something that is inherently bad. Firstly, you can't tell us that, oh, monopoly isn't going to work because when these guys choose to withdraw, they are most likely there's most likely going to be a deficiency in the economy. Firstly, you tell us that they aren't going to withdraw because they see an opportunity. But secondly, we just generally think that, like, at the point at which they decide to withdraw, right, we would have made enough progress within that industry in itself, inherent of the profit that we make, to be able to sustain ourselves. We think that government needs every sort of financial it needs every sort of like financial burden to be alleviated from its part. What does investment really look like? Investment looks like the need to create, to develop, and to take advantage of industries at an opportune time. That is to say that investors are only going to invest in anything at an opportune time where they see that there is a need for them to invest within that instance because there are quick returns, right? So we think that also the magnitude of investment in and of itself is something that is different. Comparatively on government side, you're going to get a world where fine government does, yes, do that investment, but that investment isn't really like necessarily as enough to necessarily like create type of industry that we want to do. That is to say, 5% may never really be enough for a specific project. And we think that because government cannot foot the bill, startup companies cannot foot the bill, it becomes inherently unjustifiable for you to impose that 5% when you can't sustain it as a government in and of yourself. So we think that there is no like necessity, there's no necessity for government to necessarily like impose monetary restrictions, because firstly we think that like the amount of capital that which you give into a specific project is defined by the magnitude of that problem of that project, right? That is to say that at times you might need to give 2 million, at times 5,000. So we think that because like 2 million is probably much more of a burden for government to handle, 5% may never really be enough for you to see through that project. This is something that these guys don't necessarily take into account. Best case where you guys diversify, you don't show us how like there is necessarily any quick returns for these guys, and how like how they're quick returns for these guys, and also how you sustain them within that country in and of themselves, right? But secondly, you don't show us how you're going to be able to foot the bill whenever like you have an emergency within that instance, because it's hypocritical for you to say, oh, listen, we're going to call on you guys to give us more money when you're financial repression, but we don't call you to give us more money when we're not in a financial repression. Firstly, because you can't foot the bill to diversify in the best case scenario doesn't necessarily work. Worst case scenario where these guys don't diversify is to say that they don't invest at all. We think that this investment is particularly important, like them investing is particularly important because it maximizes on the development. We think developing countries need that economic boom, and it only happens at a point in time when investors can inject as much money as they can into that particular project. And also, like generally, investors like to take on risky investments and huge investments, right? Because that is where you get the most amount of returns. And this is something that we can't like necessarily like offset from these guys. Also, why do monopolies necessarily work? Monopolies work because of the benefits that we've given you in the beginning of our speech, to say that they give you access to the market, and also they just offset the burden from government, etc., etc., etc. So at best, in both worlds, you don't necessarily get development for low industries, but at least from our side, government gets to channel all the resources that they have towards the industries that necessarily don't have as much attention as possible. We think that investors don't like to be micromanaged, and when they see something that is opportune, they take it. It is not the responsibility of government to offset the bill and to offset the risk. At best, we think that government has got the legitimacy in this case not to do this, because they are offsetted from the responsibility of focusing on that industry. We are proud.
We'd like to thank the speaker for that fine speech, and we invite the government whip. Yeah.
Yes, okay. Okay. I'll start in 3, 2, 1. I think what you get from Bukosi is important because it engages all the ideas we get from op teams. The fact that these startups are not going to get money, they're going to collapse, and we're going to have a bad economy. We think the reason why we are important is because we proved to you that entry into investment is more likely to happen in our world. We think this is true because of what Bukosi tells you. More people are probably going to get into investment because all you have to give is 5%. So if I want to invest into things like my passions and things that I care about, that's something I'm more likely to do. We think a company can still get 5% from multiple different investment companies. It's unclear why they are suddenly not going to have money to like go on with their activities. We think that's more important than what you get from OG. Their whole idea on like principle on how the government ought to protect these specific investment companies. And we think it heavily engages op teams, and we think it takes out a lot of their material. The second most important thing you get from him is why diversity in investment is something that's good. And we think this is important because OG presumes it's good and nothing is inherently good. You have to prove why it's important. We tell you that shareholders affect things like policy. We tell you it affects things like creative freedom. So even all the startups that op teams want will not exist in their purity because they have to buy into these investment companies, and they buy out a big chunk of these companies so they get the ability to control what they do and what they produce. We think that's bad. We think those startups at the end of the day are just irrelevant. We think the last thing then is the idea of like over-reliance on investment. And we think this is important because we tell you at the point where these startups are going to think the only way to survive is to get investment, that becomes harmful. We think even if they won't get investment in our world, at least we force them to think of alternatives that Bukosi talks to you about in terms of collaboration and even diversifying the things that you produce, moving into retail and stuff like that. If we think that's going to make them more stable, we think that's fine. We don't think it's an issue. The last thing is the idea on like buyouts. We think this is another thing OG does. They assume buyouts are bad, but we think Bukosi tells you why they are bad for these specific companies in terms of their creative freedom, in terms of how shareholders are able to just affect their policy, and think that's something that's important. The idea of risk. We think op teams are like right in calling out OG. We don't think risk exists because these companies are big. We think risks exist because they aren't able to make the best possible decision. When like there's specific economic growth in specific sectors and not others, then these investors are going to run into things. That's why in 2008 they ran into mortgages. It's not because the Lehman Brothers were too big. We think at the point where we're able to show you that that's the case, then we're able to prove why this specific cut on how much they can invest is something that's important, because the policy that we are fronting as gov teams doesn't solve the problem that OG identifies of these companies being too big, but it solves the problem that we identify on them probably making bad decisions because, you know, they just, I guess, probably thought some part of the economy was doing great. We think that's important. Engaging CO. The first thing they say is startups fail because you aren't able to maximize profit. Well, this is ridiculous because you saying that they're going to appease the public is exactly why they're probably going to get profit. Because if more people are buying my products, then obviously I'm making more money. Regardless of how cheap this is, I'm selling to a larger group of people. But secondly, it's obvious that there's competition in the market. So it's unclear how suddenly increasing your prices makes you the most successful. You're a startup, no one knows you. But secondly, you're the most expensive. Why are people buying goods from you at the end of the day? We think the next thing is how investment in other sectors is able to happen. And this is just more reason to prove why our extension is extremely important. Because we tell you at the point where more people can move into investment, because the threshold to become an investment is lower, you just have to give 5%, then more investment companies can come in. So you can invest in your passions, you can invest in minority groups if you're black and you want to invest in black people. That's something that's more likely to happen in our world. So even the number of people investing in things is better. But secondly, you say these companies already know that Africa is lucrative. Exactly why they will still keep investing. We don't necessarily see how like you can bring up an argument and take it down on your own. We think at the point where we prove that's something that's important, then we think that's something that's valuable. But even on a comparative, at least in our world, there's more incentive for them to want to move into these like startups and like smaller sectors. There's absolutely no incentive in your world. They can do whatever they want to do. In our world, at least this policy is to some extent going to shift them. If it's not perfect, we still think it's comparatively better. The other thing they talk about is how you're probably going to like regulate power and stuff like that. We think our extension is different from OG again, because what OG says is that the problem is between state and investment companies. That's not the problem. The problem is between these investment companies and the companies they invest into. We think at that point, accountability is harder because you can't necessarily tell if a company is like shifting the policy of a small startup because government cannot like have watchdogs at that scale. We think at the point where they're able to do some slight policy shifts to these specific companies in the things they produce and the things they do, that's even more harmful because you can't hold them accountable in that regard. We think our comparative is so much better because at least you have multiple investment companies investing in this company. So you have different people sitting on that board. Not everyone can, I guess, get to do whatever it is they want to do. We think the level of accountability in our world is far much better. Lastly, on financial collapse. Financial collapse affects startups and weaker like groups of people the most. we protect these people because we give investment companies an incentive to probably want to invest in these places because they want more returns. So 5% in one industry won't help them. They'll probably spread out the 5%. At least we're able to comparatively better than you protect these small groups. We think the first thing they say is like, we're not going to have sufficient investment. We think I tell you how our extension engages this because you have more people moving into investment. But secondly, a company can get investment from different like investors. It's unclear to me why it's just 5% that you're getting at the end of the day. We think that's something that's extremely important. But if the area is as lucrative as OO claims, we think more people are going to come up and want to invest because you don't need to have as much money as in status quo to become an investor. So if it's very lucrative and people care about tech, then more people will come into tech. We think we're still able to, at least to some extent, maintain or probably even have a lot more money. The last thing on accountability, we don't think venture capitalists are the only big companies. So if you're saying that private sector needs to hold government accountable, there's several other monopolies in other areas. It's unclear why it's only investors that are big. But secondly, we still don't understand why this is important at the end of the day. We think things like state capture are still harmful at the point where the state cannot make its own decisions. We didn't vote in these private investors, so it's unclear why they need to be the ones like checking government and telling government what to do. But secondly, you already agree that there's a power imbalance. So it's unclear to me how state is suddenly going to be like checking the people who they are in bed with, the people who are investing in their like campaigns and stuff like that. You can't like claim you have accountability if you don't prove how this accountability is happening at the end of the day. Accountability in our world is deeper. We have competition. There's multiple investment companies. They're at the same level, so they have the same amount to like hold each other accountable, the same bargaining power. But secondly, we tell you we're able to at least have companies have multiple people sitting on the board because you're being invested like 5% by many different people, so there's less likely the ability for them to shift your policy and like change what you do at the end of the day. At the point where we're able to protect these startups and prove you still have money, we rank above OG. But at the point where we're able to prove to you that it's extremely important for us to have accountability, now accountability in our world is more feasible and more likely, proud to win this debate from CG.
Would like to thank the speaker for what was a fine speech, and we invite the whip. Yeah. Chief Whip, if you're saying anything, you are not audible. Yes, you're now audible.
All right, great. So let me just give me a minute to switch up something, and then, yeah, we'll get to the speech. Just to get my notes ready.
Hey, just to confirm though, would you be taking a POI from opening government, so I'll know to stay on or to not stay on?
No, it's fine. I'll take a POI probably at the 5th minute. It's fine.
No, you can leave. Well done.
All right. Anyway, before we get on to the debate, I'll be taking POIs in the chat space. I'm looking at chat space in order to keep my time right. So just put them there, and I'll probably take it around the 5th minute. I'll be keeping track. No worries. And for preferred pronouns, not sure if you'll need to refer to me, but for preferred pronouns, he or they, right? So if that's okay with everyone, my speech will begin in 3, 2, 1. Our panel, so a couple of problems that we get in today's debate, and why probably the speech is going to be the most important, because it clarifies a lot of things. It takes a lot of cases that are quite messy to begin with, right? So what I'll do in my speech, I'll firstly tell you why the government bench is out of this debate and why probably CO takes this debate, in fact, definitely takes this debate over OO, right? So a couple of engagement, a couple of clashes that we get from government bench, right? So both take OG and CG as their best cases, right? So they have this whole idea around monopolies and how monopolies are directly bad, right? But we tell you that that's probably something that's not even going to happen in the first place, even if they were to assume it's going to happen. Why? Because we think monopolies are not going to exist at a point in which venture capitalists themselves are more concerned with high growth investments instead of creating monopolies themselves. So we think at no point will they be interested in creating any sort of monopoly because they are profit oriented, and we think that they're going to diversify. A proper example of this is how you have Sequoia, which has bought shares across Airbnbs and Dropbox and Reddit and multiple companies, not because they are located within spaces where monopolies are actually present, but they're located within spaces that are lucrative in their own nature. So the very lucrative nature that they also admit to is exactly why monopolies are likely to exist. But also the very argument that they bring on the attractiveness of this investment is exactly why monopolies are likely to exist in any case, right? Because if they're so attractive, it's not particularly clear why more venture capitalists are not going to sort of come into the spaces themselves. So we don't think there's going to be any monopolies, right? But in any case, even if there were to be monopolies, we think that those monopolies themselves are quite important, right? Because we think monopolies are able to ensure a constant supply of goods and products within the market themselves, which is something that small scale businesses aren't going to. Small scale businesses won't adhere to. Now, why is this particularly important, and why do we think this is probably the case, right? Because in their best case scenario, both OG and CG talk about how you're going to have more people coming to the market. This particularly comes from CG about how you get more investment because it's not so expensive anymore, and we think this is absolutely quite problematic, right? Because when there's a lot of investment within that particular sector, the market becomes saturated, right? Why is this particularly important? Because once the market is saturated, panel, then you get not so much substantive investment. Why is this true? Because there are many small scale businesses and none of them is able to maximize market capacity. And this is quite important for investment, right? Because at the point in which you're not unable to maximize market capacity because there's so much competition within the market, then you're unlikely to grow whatsoever, and you're unable to grow to the required size that will enable you to enjoy economies of scale. So this is quite important, right? But they also have this idea around how when you have a lot of businesses within this business, you have a lot of investment within small markets. This is true. They say this is important, right? And this is something significant. We tell you that is the opposite, right? Because when you have a lot of small economies within the market itself, what you have is what you call a race to the bottom, right? Which is all these businesses looking to satisfy the customer market, and this is something Z talks about. Because these businesses don't particularly enjoy economies of scale, it means they're unable to produce at lower cost, which means that at the end of the day, you have the very inflation that OG seeks to avoid in this debate, because none of them can enjoy economies of scale. So you have much more products being more expensive at a point in which you're unable to get any substantive capital coming into this market, right? So this is why it's particularly important, and Z tells you why monopolies are particularly important in this debate, right? So that's exactly how we deal with CG and OG, right? But they also have this idea around small markets still on it. On the last part of argumentation, we talk about fragmentation, right? Around how when markets are fragmented, you don't necessarily get any benefit for everyone, right? Because we think when markets have multiple investors, they can create conflicts and interest in investor decision making, right? Each investor has their own interests and goals, which may not align with those of other investors. So you have a lot of businesses failing because of infightings, and this is something that is quite problematic, something that you do not get in our side of the house, right? So why is it that what CEO brings is quite important in this debate? What CEO tells your panel is that any point in which you give governments within developing countries an opportune time to invest, then you basically allow them to focus on more important areas, areas they would otherwise not be able to touch. Why is this particularly important? Because at a point in which you are able to have venture capitalists investing a lot of money into lucrative businesses such as infrastructure and everything, it means you get the amount of infrastructure necessary within developing countries, but governments can also channel their own resources towards other sectors, right? Why is this particularly not possible within our government side? Because at a point in which you have a lot of small businesses, which is likely what is going to happen, because none of them is ever going to be able to grow to the required size as I give you in my analysis. You're not going to have any sort of investment that is sufficient to cater for the market needs and to cater for the concerns within developing states. So we think in this case, at a point in which you have monopolies that can monopolize and successfully have enough capital to sort of improve these economies, then it is something that is much significant. So before I go any further, I'll take OG.
So the motion says this House would mandate, which means that it is a policy debate and make states the primary actor unless proven otherwise. You can't say we can't question states' legitimacy. Closing government cannot say this is not a debate about states and investment companies. What you need to prove is that no regulation would at no way cost the state, and bailouts and all the things you say are not just ridiculous, like are not just enough to claims.
Thank you. Panel, notice how we're not even questioning whether governments can or can do this, but we're questioning whether governments do this. What we tell you from CO and why it's particularly important is that when governments do this, they rid themselves of the opportunity to focus on other areas that are important, because then these areas like infrastructure and other technologies cannot exist within their world at a capacity that is necessary, right? But also we talk about how you overburden government, which is why this argumentation is particularly important. So at this point, panel, we are not questioning the legitimacy of government to this, but we are telling you why the government should not limit the amount of investment that comes into the country, right? So what is it that we tell you from CO, and why is it particularly important? We tell you about why it's important to have alternatives within the context of Africa, right? Because we tell you that within the context of Africa, which is where OG's case usually relies, is that you don't have any alternative to this 70%, because the very idea that small scale investment will come, which comes from CG, is not particularly true, because even if you have a large number of investors, you don't necessarily have them in a capacity that will enable you to sort of address the needs in a way that Google would. They are not able to maximize within the market, because then they have created stiffer competition, right? But this whole idea on diversifying risk is not particularly true, right? This is what Z tells you in his speech. It's not particularly true, because we think such things such as the 2008 financial crisis wasn't caused because there were monopolies. No, rather OG is misleading. But it occurred because there was systematic risk that you cannot offset, right? We think there was a problem within mortgage systems, within banking systems themselves, and this was exactly what caused what caused the problem, not necessarily monopolies. So we're at a point in which we're able to prove that monopolies are quite good and they're quite beneficial, and that small scale businesses don't work, and that the level of investment that's necessary offsets the government responsibility. We think CO clearly take this debate as we cater to more people. Proud to oppose.
For that fine speech, and we end this debate here. Thank you for what was an interesting round, and all the best in the project. I guess. Can the adjudicators join me in the deliberation?